Right? You can see even we can work out the tax liability of the company. Can you work out the tax liability also? Right. First thing, if you are working out the tax computation, so I told you the tax computation will be separately. We need to work out. So this is coming as a working for the tax computation, right? Tax computation, how we learn. So source of income, taxable income. Could be business, investment, other source. Right? So thereafter, when you work on the taxable income, we can deduct qualifying payment. Like that. After that, this thing. This is called taxable income. From taxable income, we can work out the tax, apply the tax rate. Right? Right. So each of because taxable income from each source need to be worked out separately. We need to work out separately. Right? We work out working one and working one taxable income from which. It says RPM construction private limited. Computation of taxable income. From business. General fund. 2024-25 in LKR. It's working, right? Working one. And we start from profit before tax. Before tax, how much? 15 million. Right? That's all. The first thing is issued share plan reserve. That is not relevant right now. We'll check how it need to be adjusted, right? Income and expenditure adjusted these things. So administrative expenses, salary for construction work. Construction work. Can we deduct or not? Level. So it is required, right, to generate our income. So remember, so under any section we need to discuss whether salary is deductible or not. Any section doesn't talk about any disallowable single cost, right? But the section 11 says any expenditure incurred in the production of income. You check whether to generate that income, whether this expenses is required or not. How it should be connected? It should be not remotely, closely connected with the business generation of income. Yes, salary is required. So it is allowable deduction. allowable. So do we need to deduct? No, it has all been deducted. That allowable expenditure when we arrive in the profit before tax already considered. So therefore we cannot deduct again. It's deductible, right? That's fine. But no adjustment is required. Right. Depreciation. Depreciation is a what is provision. Provision is not allowed. That is under section 10. It says any provision for the future expenditure right now, not yet the future losses not yet occurred. Right? So provisions are not allowed. Disallowed. How much? 8 million. So it has all been deducted. When we arrive in profit before tax, as per the tax law, it is not deductible. Therefore, we have to add. Understand the concept, understand the law, and do that. Right. EPF and ETF. Tell me whether we can deduct or not. EPF and ETF can we deduct or not? No. No. Can. Can. That's or not? Okay, that's or not? Can. 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 These are the answer. Cannot calculate get by one. No. So if it says the additional details are given, this has been contributed to the regulated fund. Under section 10 says, this is under section 10. So disallowable, under that one says, if the particular fund is not approved by the commissioner general, fund should be approved. If it is the case, yes, approved, otherwise not. So regulated fund means approved fund. That means deductible. Right? So in an examination context, if the examiner is silent, you can make an assumption. That is valid assumption. Fund is approved by the commissioner. So by doing so, he can do. Generally, yes, that means EPF, ETF, that means the approved fund they are doing contribution. As per the law, it is regulated. So then it is up. Otherwise, especially should mention whether the fund is not approved, because there are some funds, private fund also there. EPF, ETF, you know that EPF is we are contributing to the central bank, EPF governed by central bank, provident fund. Apart from that, the private fund also that they are EPF. You can see that under the what is that plantation sector they have separate fund. That likewise in the so bank they have separate fund. They can maintain. If that particular fund is approved, yes. Regulated fund means it already approved. It is governed by the that EPF as well as labor. Right? EPF comes under labor. Right? Yeah, it is then regulated fund approved. Already done that, we need not to deduct again. Loss on disposal of construction machinery. Loss on disposal of construction machinery. That is loss. That is accounting loss. You can see accounting loss. So disposal of what type of asset? Depreciable asset or the capital answers entitled asset. Right? So the accounting adjustment is not relevant. We need to separate adjustment. That is tax adjusting item. Right? Right. Okay. So therefore, first we have to remove that accounting impact. As per accounts, it's closed. That means this profit before tax means after deducting that amount. Therefore, we have to add back. How much? 750,000. That is as per the financial inflation, accounting treatment. We ignore now. The asset is just like that impact is not there in the tax computation. Right? Acceptable income computation it is not there. So we'll do that tax adjustment. Note number 1 we'll do of machinery. Right? Disposal of machinery. So what is that? How much? Machinery was purchased in the year 2021 for rupees 2 million and disposal made during the year for rupees 500,000. That means disposal proceed is 500,000. From there we have the tax return on value. Machinery. Right? What's the cost? Cost 2 million. From there we can deduct capital allowance. Obviously, if it is a asset which is used in the business field, they would have claimed capital allowance. Right? So it's capital allowance for 5 years, right? You should know how many years we can claim capital allowance. Unfortunately, you cannot take that to the exam. Therefore, you have to remember the number of years. Right? So that machinery 5 years. Right? Only a building and permanent nature structure 20 years. Intangible asset. If the examiner or if the useful lifetime has been given during the useful lifetime, otherwise 20 years. And machinery used in the local liquid milk industry over a period of 2 years. Right? Other than that, both assets over a period of 5 years. Depreciable asset, right? Right. So 5 years, right? So then it has been acquired in 2021. 2021 they would have claimed capital allowances. How much? 400,000, right? 21, 22 they would have 22, 23, 23, 24. What are the 4 years they have claimed capital allowances? This year they cannot claim capital allowances. Why? Capital allowances claim at the in the year at the end of the held at the end of the year. So that they would have not they are not entitled to claim capital allowances this year. Right? Even it is disposed in say March, even they are used for the business for a year, 11 months in the year, even we cannot claim. Right? Right. Once we deduct this thing, how much the written down value? Written down value is 400,000. 1,000, correct? 2 million. We are working 1.6 million. 4-year capital loss. Right? Correct. Because if it is an asset which entire for 5-year capital loss, 4-year we have already claimed. 1-year capital loss is remaining asset written out. 100,000 plus disposal proceed is higher than the written down value. Disposal proceed is higher than the written down value. That means what is the terminology what we need to use? What is that? Accessible charges. Yes, accessible charge. Otherwise, if the disposal proceed is low compared to the written down value, means balancing allowance. This is accessible charge. Is it plus side or minus side? Accessible charges means further it should be assessed. Therefore, it should be plus side. You can see the accounting adjustment also in the plus side, tax adjustment also in the plus side. May not be necessary the amount, I mean the work cases, right? Could be in the other way also. But first we ignore that accounting adjustment. Thereafter we do the tax adjustment. It could be in the plus side or the minus side. Right? Clear? Right. So rent paid for building 2.4 million. Right? Rent paid is 2.4 million. Rent 2.4 million. It says 2.4 million, monthly rent is 200,000. That is correct, right? For the year 2.4 million, right? It says total payment has been paid in full at the beginning of the year. So beginning of the year. Year means always year of month. The beginning of the year, the total rent has been paid. 2.4 million. Total pay at the beginning of the year to the property owner. So generally rent we are paying in advance, right? So rent we have already paid. So first thing we have to check whether that particular expenditure is incurred for the year. So why I am telling, say we are obtaining a say building for a 2-year period. 2-year rent right now we are paying in advance. So what is the relevant amount? 12 months. For the year of consumption, how much? So that need to be also considered. Expenditure incurred for the production of income. It's not yet incurred. Part is advance, part is relevant for the year. That is the incurred amount. That's the first thing. Second thing we have to check whether relevant withholding tax is deducted if any expenditure is subject to withholding tax. Rent is subject to withholding tax, right? At what rate? 10%. If the monthly rent is exceeding 100,000, it says monthly rent is exceeding 100,000. So we don't know because no silence on that part. And there is some sort of hint given. Total rent has been paid to the owner. That means they have deducted withholding tax. So as per the section 10, subsection 2, if any expenditure that require to deduct withholding tax, but payer is failed to do, so that particular expenditure is disallowed. Disallowed. Right? Therefore, this as per this one, the total rent has been paid. Now withhold tax has been deducted with disallowed. How much? 2.4 million. You can see. So entirely it is incurred in the production of income. That is relevant for the business. That relevant for the year of action. But even that, if that payable tax relevant withholding tax, so total expenditure cannot be deducted. Therefore, we have to check the real case also. We don't know whether it is subject to withholding tax or not. Firstly, we have to check whether it is subject to withholding tax. Right? If the company or the person who making the payment is paid to tax, so particular expenditure is disallowed. Also, other one thing that need to be considered. You know, under section 10, same section we discussed. Any expenditure which is more than 500,000, more than 500,000, if it is made other than the recommended or the allowable method of payment, that particular expenditure also disallowed. Right? Right. This is anyway we have adjusted. Right, disallowed. Next one is write-off of withholding tax. Is it deductible or not? Write-off withholding tax means withholding tax they have a credit, but they are not in a position to claim that one. They have write-off. Can they deduct or not? No problem. One way. Bye. No problem. This is withhold. It's not bad. It's not one way. Right? Why we can't? Tax එකේදී එක්ක පුළුවන් එක්ක බෑ දෙකෙන් එකයි. පුළුවන් බෑ දෙකම නැහැ. ආද බෑ නැහැ දෙක එක්ක බෑ එක්ක පුළුවන්. ආද බෑද කියලා අනිත් දැනගෙන ඉන්නවා. නෝකා. නඩුලා බයි. Final phase. All information you are related to final law. This tax, right? Hey. Anything in mind? Okay. One by. Vậy đó này. Kalau kita gitu mau karya itu nih, kita nanti deh kan tuh nih hari. Kalau pernah kerja nanti. Kayak dulu orang kayak paling itu kan ada nanti. Production of income. Tahu nih. Sudah kami ada section level kan. Orang mbak. What is that? Toll tax and separate tax are toll tax and what? Huh? Income tax no one. So income tax is not a deductible expenditure. It's income tax. The payment method is withholding. Income tax. So income tax is not deductible. Therefore, that's not deductible. That it could be withhold tax, it could be APIT, it could be EIT, whatever thing. The call is withholding tax. This is the mechanism is withholding tax. Withholding tax means payment method of income tax. Income tax is not a deductible expenditure. Therefore, it is disallowed. Right? Prescribed tax. Says under the taxes under this law. You remember under section 10. It's a long area. एक ऐसा ना मंगली बड़ा करते हैं प्रॉफिट बिफोर टैक्स है इनकम टैक्स सरकार देना है लेकिन अभी प्रॉफिट बिफोर टैक्स वाले बड़ा करते हैं इनकम टैक्स एक्सपेंडिचर है expenditure that's why we deduct from profit is expenditure we are paying to the government tax out of our expenditure है ताला भी मिलना है income statement के में tax दी tax का income statement दाने एक को income में क्या ना एक को expenditure का क्या देखिए में दिया दाने है दाना income statement no either it should be income or the expenditure so it is expenditure but it's a tax is not deductible expenditure that's why we are in that right and but කියලා නෑ income tax එක මොනවද කියලා නෑ තෝරන්න කියලා කියලා තියෙනවා so but it's the income tax right method of income tax payment how much 150,000 so marketing and advertising expenditure deductible වෙද නැද්ද can you deduct or not cannot can marketing and advertising expenditure can you deduct or not can 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 yeah it says so marketing and communication expenditure remember section what section 58 It says marketing and communication expenditure, even it is capitalized expenditure, we can do. Even capitalized expenditure, we can do. Right? So if it is incurred in the production of income, it could be capitalized because capitalized definition is section 11 says, 11 says capitalization means any expenditure which secure the benefit for a more than 12-month period. So I told you that the advertising expenditure could be more than 12-month period. So under section 15 says, 15A says, even it is capitalized or not, that particular expenditure is incurred. So for that purpose, it should be incurred only on the production of income. It is not incurred in the production of income, anyway we can't do that. Right? So yes, it is deductible incurred in the production of income. Can already be deducted, again we cannot do that. Right. Company has supplied concrete related products to Colombo North Teaching Hospital. Rather to renovate the hospital building. That hospital building concrete product related. Total cost of the product was 2 million. And this was a CSR project done by the company during the year. Can you deduct or no? No, right? Instead of anything, yeah. Not approved. No, why? Only money. And it right? It's not cash donation. Goods. You have money. Can it? Can it? Let me tell you again. Can So, Srilankan government on. Donation to government. Australian monthly school government government against you now. So government donation na cash or good they come pull. Right? That is the answer. So when we work out the actual income from business, there is no chance to not expenditure incurred other than production of income. Is it required for them to run the business? Any connection? I mean the donation they run or they run. So because it is CSR project. So when we work out the accessible income from business, this is not a deductible expenditure. And accessible income make a work out we cannot deduct. But we have to separately check whether it is deductible under the qualified payment or not. That is when we work out the total accessible income, from total accessible income, when we work out the taxable income, we are deducting qualified payment. And method them is there is something else. Business, business loss. We have only investment income. Even we can deduct. Why? Qualified payment we are deducting from accessible income, total accessible income. Accessible income could be from business, investment, or other source. In this case. Right? Whatever accessible income, total accessible income, from there we can qualify pay. But when we work out the business income, accessible income from business, it is not deductible because it is not incurred in the production of income. Right? So that is not the case. Law is very clearly saying any expenditure not incurred in the production of income, you can deduct. But qualifying payment, even you don't have that, but the business income, you have only investment income. Even you can claim. Right? Right. So CSR project. Where are the So not incurred in the production of income. Write down here. Not incurred in the production of income. So we have went by how much? 2 million worth of goods. Goods donation government. Qualifying payment? Yeah. There is no restriction. Total amount can be deducted. Money or otherwise. Right? But it is under qualifying payment. You can make a note here. Qualifying payment. After that it is coming. Right? Then they will check the one. Qualifying payment on here. Right. So stop loan right off. Can it or not? Will it write off? No, staff loan is not trade debtor. The company not, not incurred, not necessarily incurred that staff loan to generate income. It is not deductible. Same thing. Not incurred for the production of income. How much? Not going to me. Not to trade debtor. Therefore, not incurred in the production of income. But if it is a finance company, it could be right. Loan can't insert their business loan. But in case of the this business, it is not entitled to grant staff loan. They are unable to claim. It's not a deductible expenditure. Right. Then I'm fully allowed. Rohita, go back in. Back and out to there. Both are disallowed. This is provisioning. Provisioning anyway not allowed. 8 million. But if they are write off, yeah, write off is possible. So finance and other expenditure. Shall I analyze this? Let's say interest cost. First we'll add back that has already been done when we arrange the property through that. First we add back entire interest cost, thereafter we deduct whatever allowed. Right? Interest cost. How much? 8.7 million. So deductible amount of interest cost. Not 2. Under note 2. Right? Deductible amount of interest cost. So from total interest cost, how much? 8.7 million. First we will remove that disallowable interest cost. Disallowable interest cost. So what are the things allowable? It says borrowing which is used in the production of income. Just for the business. So production of income allowed. That particular interest cost is allowed. Or which is used to purchase an asset. Asset should be used during the year for the production of income. That particular interest is deductible or the allowable. Right? It means that if any borrowings not used for the business, it is also not deductible, and it's used for the acquisition of the purchase of an asset, but asset is, that particular asset is not used for the production of income during the year, it is also disallowed. With that understand, shall we read? Right. It says interest cost. It says a bank loan of rupees 3 million. Loan obtained during the year 21-22. Loan has been obtained 21-22. Cost rupees 8 million. This loan was to finance motor car purchased by the company. The loan has been used to purchase an asset by a company director for his private usage. The loan has been used to purchase an asset, motor car, that it says it is used by the director for private usage. What does it mean? Loan has been obtained to purchase an asset, but asset has not been used during the year for the production of income. This for private asset. Right? This is not a deductible interest. How much? Capital repayment and interest repayment is capital repayment will be interest is 700,000. disallowable. Right? So second thing, bank loan of rupees 10 million. Loan obtained for the purchase of construction material. During the year was rupees 50 million. During the year they have obtained 50 million. Capital repayment was 5 million and interest for rupees 2 million. But they have used that loan to purchase construction material, raw material. Right? That means loan has been used for the business. During the year they have used. It is deductible. And it is not disallowed. Right? So third one. During the year company has obtained a bank loan of 30 million to construct new concrete block manufacturing plant. Concrete block manufacturing plant. There is a concession period of 1 year to repay the capital. Company has paid interest of 6 million during the year. The plant was commenced manufacturing the product at the end of May 2025. Can you get that interest or not? Okay. Yan mga dapat ilating na balon. Teknik yan. And that's all. Hello, commercial interest after the year of investment. The condition is you are charging out. Right? This first condition is satisfied. Borrowed money has been used to purchase an asset. That's fine. But second condition, in case of the assets, definitely assets should be used during the year for the production of income. So it's that as per this one, end of May, they are commencing the business end of May. That means they have borrowed money to purchase an asset or this construct an asset, acquisition of asset. But that asset is not used during the year for the production of income. Therefore, it is disallowed. Borrowed money used to construct an asset, but asset has not been used during the year during the year for the production of income. Borrowed money, borrowed money used to construct an asset, but asset has not been used during the year for the production of income. Therefore, it is not being allowed. How much? 6 million. So, we check only one interest. Is it related to the this one? We can do that. Right? Borrowed money used for the this one. Production of income. Now we have allowable finance cost is so much. Allowable finance cost. Right? So from there, because this is company, in case of the say partnership or the sole proprietorship, this interest we can deduct. Finance cost. We can deduct. But in case of the company, we have to work out what the deductible amount from allowable finance cost. Other one can be again. Other one idakan pulang kan? දැන් ඒක බලලා ලියන්න ඕනේ. ඔක ටියුට් එකේ තිබුණා. ඒක කොහොමද? We should have that ටියුට්. How much we can cut? Go in. How much we can? How much we can tell? So the other finance cost we have worked out. That is 2 million. By cost of debt instrument. So what is the debt instrument which belongs to this allowable finance cost? Right? So loan obtained for the purchase of construction material was 15 million. Or 15 million we have paid that 2 million. Ending balance is 10 million. Right? So then 15 million, right? Bank loan of rupees 10 million, that is the ending balance. So loan obtained for the purchase of construction material during the year was 15 million. On that 15 million we have paid 2 million, right? So the ending balance, opening balance we have paid. Repayment of 5 million and interest for 2 million. That's what happened. So 15 million we obtained. On that we have paid 2 million. Capital repayment is 5 million. Now balance is 10 million. But interest incurred on this 2 million, but the loan amount 15 million. Multiplied by 4 times. Multiplied by issue share how much? 50 million issue share, right? Which one? The fourth time I'm explaining. Right? Cost of debt instrument means what is the relevant for the allowable finance cost? So allowable finance cost is 2 million. Right? 2 million relevant to this particular loan. Bank loan, that is independence. 10 million. It says liability as of 31st March 2024. Fine. What the loan amount obtained? Loan obtained for the purchase of construction machine during the year. In the year, they have 15 million. They have obtained 15 million loan. On that, they have paid 2 million interest. And they have paid timely capital repayment. That's how the 10 million remaining. 15 million only. 5 million capital, 10 million. So that particular loan interest incurred for this 15 million. Right? Right? So 4 times it should be to how much? 50 million. So how much reserve? What's the answer? From the next one, it's that interest is expense. Yeah. Okay. Yeah. Now the social plan is over at the end of the year. Can I hear on you take you tell me that take can so okay. So interest incurred කරපු එක කිව්වම loan එක මිලියන 10කට interest කියලා දෙන්න 15කට. මේක ගන්න. $30 million. Loan is $30 million. That loan interest we have disallowed. I mean, allowable finance cost relevant loan expense. දැන් අපි allowable finance cost එකෙන් කොච්චරද අපි අඩු කරන්න කියලා. ඒතකොට disallowable interest cost එකට දාලා ඕනේ වැඩ නැහැ. Now from the allowable finance cost, how much we can deduct? හරිද කියන්නේ? කියනවා. 40 1 minute. 40 million. 40 million, right? හරි කියලා ගන්නවා. 40 million හරි කියලා ගන්නවා. So this is the amount what we can deduct. ඒක අල්ලන්න පුළුවන්. No. This that is, remember, that is deductible amount. Up to that amount we can deduct. Up to that amount we can deduct. But what amount we have, that allowable finance cost 2 million. Therefore, 2 million we can deduct. This shows the maximum limitation. Maximum limitation. From this formula, what we work out, that is the maximum. That is the maximum interest cost what we can deduct for a particular year. Right? That is the maximum interest cost what we can deduct for a particular year. The formula is up to 4 million we can deduct, but the allowable finance cost is 2 million, therefore 2 million we can deduct. Make a 52 වුණා නම් 42 වුණා, so we can deduct 40. 2 million can be carried forward to next year. Say it is 52 million, so 40 we can deduct this year. 12 million has to be carried forward to next year. Right? Million. Right? Now we did a finance cost assessment, we did scrap sale. Therefore, we need not to adjust again. It is there in the profit before tax, so we need not to adjust again. So that's all about on the main thing. So other things. So from the asset and liability, trade and debtor, trade debtors, not much important. Cash and bank balance, not much important. So bank loan, trade data we have considered. Not got bank loan we have already considered. So then real and reserve also we have considered non-current assets. So we need to work out the capital allowance. Depreciation, accounting depreciation we have already add back. Now capital allowance. So this asset has been acquired prior to 2021, right? Million. Cost how much? 25 million. How many years? Million? 20 years. You can claim 2021. 1, 2, 2, 3, 3, 4. 4 years they have claimed, and the 16 years we have. Therefore, that means we can claim how much? How many 250,000? Machinery? $12 million. How much we can claim capital losses? Tell me how much we can claim? Kosko chahte na? So what the capital amount for machinery? How much? So remember that machinery. So this is opening balance. Is there a disposal? We have to know. Disposal is construction material. 2 million cost. It's the day. So you can get 10 million now. 2021, 1, 2, 2, 3, 3, 4, 4 years. Another 1 year we have. Result that told that in the balance you can claim capital loss. Motor car. $10 million. How many years? Motor car how many years? Yeah, traveling purpose is not that time go capital loss. So next one. Computer. $5 million. That's also 5 years. $1 million. ERP. $3 million. How many years capital loss? How many years? ERP how many years? 5 years. How many years? 3 years. Say 3 years. That will be the 3 years. How many number of years? 2021 നമ്മൾ കത്തന 2021 ക്ലെയിം കാണ് 1 2 ക്ലെയിം കാണ് 2 3 ക്ലെയിം കാണ് അത് ഫുള്ളി ക്ലെയിം ഇതാ മേഖാണ്. So then 24 25 they have acquired some method. Another machinery. the cost? 5 million. It's 5 years, right? Remaining 5 years. Construction equipment. Remaining. Computer. $6 million. ERP. How much? Total. That's all right. Back to the income from business. First one is 3 years. Oh, generally it is for a period of specially mentioned in that particular period. The no period is 20 years. In both cases, they have mentioned that how many years. First thing is 3 years, second thing is 5 years. But the annual income from business? First side, how much? First side given? Correct? Correct. So then taxable income from business. And we'll work out the cash computation. It's RTN. So taxable income. From business. That's 6,250,000. So investment, taxable income from investment. So we didn't have. So remember, it's under working month we did this computation. So business, working month. If there any taxable income from business, we have to work out separately and taken here. Should have been taken. We don't have other sources. Now it's 4. Total taxable income. From there we can deduct only VAT payment. Qualified payment could be from, because this is company, to approved charity. Donation to approved charity. Remember, donation to approved charity means cash donation to an approved charity, and charity means charity charitable institution accepted for charitable purpose. So it should be before needy person. So, but that it should be only cash donation and to be charitable institution, and also there is a maximum limitation, that is 500,000. 1/5 of the taxable income of 500,000. So 1/5 of the taxable income, obviously, it should be more than 500,000. Therefore, it is limited to 500,000. But we didn't have any donation to approved charity here, right? So in donation to approved charity, we have to consider here. So it says, what is that? Only cash donation. Cash donation, remember, right? Memorize it. And to charitable institution. Charitable institution means institution which set up for the institutional care for sick or needy person and approved by the ministry. Only cash donation. Maximum limitation is 1/5 of taxable income. or 100,000. Lower amount we can claim. Right now we don't have. Therefore, no. B, donation to government. Government or specialized institutes or funds. Right? Just like Napi, Sevana, National Kitchipan, or funds established by the government and approved by the respective ministry, or any type of funds established by the government, or fund established by the ministry, by the provincial ministry, approved fund, that type of thing. So we have only one, that is donation to government. Here cash donation or the goods donation are allowed, and total amount we can deduct. How much donation? PSR budget is 2 million. So entire amount we can deduct. Or restriction. So then taxable income. Is taxable income. So tax liability. %. Because it is company, how much? How much? 10 million. 10,275,000. That's the tax liability. Is there a tax credit in the question given? Say self-personal payment for the year and final withholding payment, we can deduct. Right? So that has not been asked in the question. You are required to put on taxable income. So we work out the tax liability. So that is the full computation, right? So only because in the computation is the question not given any tax credit or whatever thing, if they are given the tax credit, we can do from here. Okay, right? So just like say during the how much they have paid for the year tax payment, we can do. Right? Clear? Right. Did I have a break?
Hearing when
මගේ පරණ ඕනේ ඉතින් බැලුත් එකේ ගියා නම්බර්ස් නේ.
Right, shall we start? So, We look into the session. Taxation of a non-resident person. Right. Look into that one. So we discussed that chargeability section, and as for the chargeability section, person who is having a taxable income, right, he is liable for Sri Lanka, right? So when a government imposition of tax, so they have three objectives. The main objective is revenue, raise the revenue to the country, meet up their capital and etc. So economic objective is to direct the economy, control the economy. So protecting investors, bringing investment to Sri Lanka, encourage investment. And you can see that under what is that capital section 16 capital allowances are given enhanced capital allowances. Somebody is making investment more than 3 million USD on depreciable assets entitled for enhanced capital allowance. So economic objective. Social objective. So promotion of good governance and best practices. So making donation to charitable institution. Even it is not deductible under the taxable income, but under qualifying payment it could be deducted. So social objective. That type of things are there. Disparity of distribution of the income. So to minimize that one. So if somebody is having income comparatively high, they have to pay high tax. That type of thing. Right? So therefore, when a country questions tax, so it is the law of the country, law of the land. Right? The once is enacted, everybody has to obey the law. Just like say effective from 1st April 2025. So tax rate for a company which is doing what is it? Liquor and tobacco manufacturing business. So the importation and disposal of distribution of liquor or tobacco, that business is taxed in Sri Lanka at 45%. Previously it is 40. They have increased by another 5%. That is the law. But once it's enacted, the law. So that we call sovereignty right of the country. They can create law. Once it's created, it's the law. Nobody can challenge it. Right? So you know that they can come with law. The example is say if somebody is doing wrong thing, we cannot punish them. Punishment can be done by the court after the trial. Right? If somebody is guilty and offense, so he could be subject to death penalty even. But people cannot give that penalty. People cannot kill others. Even somebody so that say person A kill person B, C has that eyewitness. C cannot punish him. That it can be done by the court. The decision is given by the court. That is the sovereign right at the country, or the we call it state. They can create whatever law. Right? So therefore, if there is transaction between two countries, we call two tax jurisdictions. Based on the country, that law is imposition. Right? Say country A and country B. Right? Two countries. Two countries. Country A, country, this country also have their sovereign rights. They can impose taxes. This country also have sovereign rights. They also can impose taxes. Right? If somebody is doing transaction between these two countries, they are coming to Sri Lanka and doing business. As per their country, they are subject to tax. As well as their country, as per this law, is also subject to tax. You know, in Sri Lanka, we learned that in case of the non-resident person, he could be considered as a non-resident person who is not in Sri Lanka, but is having an income from Sri Lanka, he may not pay Sri Lanka tax. As per the Sri Lanka law. So that we call country sovereignty rights. They have the authority. Right? Even say this person having a business income, yeah, business income. So same way we need to work out. Investment income, yes. Right? So globalization, capital goods transfer, because of that thing, one country going to invest in another country. You can see that in the port city now investment coming to Sri Lanka. Right? So because of the globalization that now transaction, international transaction or cross-border transaction we call is increasing. You know that last week we got a letter from the USA that imposition of 30% tax. If we are doing any export to USA now, it is subject to 30% tax, cross-border tax. Right? UK, they are removing taxes. Now, if they are exporting UK, they won't be tax. Likewise, based on their law, we cannot challenge that one. US increasing 30%, previously it was 44%. Now they are telling that 30%. You remember some countries, they are imposing 50% tax. More than all. So India is 25%, Singapore 10%, like that. That is there. Right? So our country also have that. So because of this, somebody is doing this type of transaction, say merger and acquisition, resource mobilization, joint venture, franchising, licensing arrangement, e-commerce. So last week, so Sri Lanka government has announced that effective from 10th 2025, any person, any non-resident person who is doing services in Sri Lanka through digital platform, they are also subject to 18% VAT. Right? 18% VAT. E-commerce. Now, basically, e-commerce are subject to tax. Right? That type of thing. So, because that has that right. So, as per the charging section, we learned that. So, any person who is having taxable income or person who receives final withholding payments are liable for Sri Lanka tax. There we didn't discuss what is the person. I mean, we just understand what is the person definition, but it doesn't say what is whether it is resident or non-resident. Whoever person who is having this thing. But when we have worked out taxable income, the taxable income says it says in the case of a non-resident person, residency status. When we have worked out taxable income says non-resident person, income from employment, business, investment, or other sources for the year of month. Hey, you are talking here. I don't know. If you want to talk, please go outside. Right? I have nothing but negative level. Today. Either you voluntarily you can go, otherwise by both I can send you. Right. In the case of a non-resident person, the person's income from the employment, business, investment, or other source for the year of month to the extent that the income arises or derived from a source in Sri Lanka. That means in case of the non-resident person, there will be an income. That source should be in Sri Lanka. That means income should be generated from Sri Lanka. Otherwise, non-resident person is not liable for Sri Lanka tax. That's fair, right? Because say somebody is in outside Sri Lanka, he doesn't have any income generated from Sri Lanka, they are not liable. But in case of the resident person, we learn that wherever the source arises. In case of the resident person, Sri Lanka context, for the Sri Lanka tax purpose, there is a resident person. He could receive this income from Sri Lanka source. or foreign source from outside. He is liable for Sri Lanka tax, chargeable for Sri Lanka tax. Right? So that is the law. So what we learn is that. So you remember in case of the resident person, the person's income from employment, business, investment to other source. For that year, wherever the source arises, we are not bothering about in case of the resident person, where that income is generating. It could be Sri Lanka, it could be say India, could be Africa, could be USA, Australia, wherever the source. Right? So it's very wide definition. Not bothering about where that income is generated. But in case of the non-resident person, we learn who is a resident and non-resident. Non-resident person is a, if there is income to that non-resident person generated from Sri Lanka, they are subject to Sri Lanka. Otherwise not. So then first thing, when we are determining taxable income, we have to check whether that particular person is resident or non-resident. So Sri Lanka tax person. Only tax person. Right? If he is a resident, or the person is resident, so we are not bothering about where the income is generated. But if that person is non-resident, then second thing we need to check whether that non-resident person has a source in Sri Lanka. Right? That is section 2. So Sri Lanka basis is income tax on the usually dual jurisdiction of residence and source. Therefore, we are following two principles. Resident principle or source principle, both we are following. In case of the resident individual, we follow the resident principle. Taxing right with Sri Lanka. Without, in case of the resident person, we can tax them. Even though they are paying tax outside Sri Lanka, we are not bothering about, we can tax. Taxing right with Sri Lanka. In case of the resident person. In case of the non-resident person, if there's a source, that now we are going with the source principle. If there are source in Sri Lanka, they will be liable. Right? So we call principle of following these things. First thing is resident principle, second thing is source principle. Right? Clearly understood this. Right? So Sri Lanka basis, so in case resident, we are the source arises, non-resident to the extent that the source in Sri Lanka. Clear? Therefore, so first thing, recognize the residential status of the person. Right? Whether he is resident or non-resident. So how to test whether that particular person is resident or non-resident? So primary test and residential test. So primary test is if that person is reside in Sri Lanka. Person is reside in Sri Lanka. Just like say permanent home, location of investing family. That type of thing we need to check. Right? So second thing is person in Sri Lanka during the year and that person falls within a period or period amounting in aggregate of 183 days. It says second thing is if physically person is important. First thing says if he resides in Sri Lanka. Reside means from the day he born here, he is in Sri Lanka. Reside. He lived in Sri Lanka. What are the factors that need to be checked? Where is his permanent residence place? Where his family is located. That type of thing we are checking. So, second thing is if individual physically present in Sri Lanka, any during the year, that person, physical presence goes in a period 183 days for any 12-month period. In a 12-month period, he is physically present in Sri Lanka. That individual physically present in Sri Lanka 183 days or more, he shall be treated as resident person, resident individual for Sri Lanka income. We are not bothering about any other provision of other. That is for the income tax purpose. He maybe have dual citizenship, right? Whatever it is, irrespective of those things, if we physically present in Sri Lanka for a period of 180 days or more for any 12 months period, not the year of assessment, any 12 months period, he shall be treated as resident individual for Sri Lanka. Right? So it is important. So that is quantitative test, number of days we are counting. Right? Number of days is important. So that is applicable for individual who come to Sri Lanka or who is going outside migrating from Sri Lanka. Both. Right? Say foreigner who is come to Sri Lanka. From the day he visits Sri Lanka, we have to count 12 months period. Within that 12 month period, physically present in Sri Lanka is 180 days or more, he shall be considered as resident individual for Sri Lanka tax. Right? Say person who migrated from Sri Lanka. So that 12 month period, we need to consider how many days he has physically present in Sri Lanka. Right? Right. So third one is an employee. This is applicable only for employee. Employee or an official of government of Sri Lanka and his spouse is posted abroad during the year. Spouse and the employee or the official of government, Sri Lanka government, even though they are outside Sri Lanka, they are considered as resident individual for Sri Lanka. So then these two are not applicable. Employee or official of government, they posted outside Sri Lanka. Right? This is applicable only for government employee and official government official. Right? Even say they are staying outside Sri Lanka 2 years. Now Sri Lanka is physical presence is less than 180 days. Even it is not applicable, they are considered as resident individual for Sri Lanka. Right? Fourth one is an individual who is employed on a Sri Lanka ship. Whoever who is employed on a Sri Lanka ship. Ship means Sri Lanka ship means ship is registered under Merchant Shipping Act in Sri Lanka. In anybody, any individual who employed in a ship for that particular period, he has been treated as resident individual for Sri Lanka tax. Right? Resident individual. So any individual, that's what I say, individual so employed, any individual who employed in the Sri Lanka ship means Sri Lanka ship means so registered under Sri Lanka Merchant Shipping Act. In such case, that individual also treated as resident individual for Sri Lanka. Right? Say we are say ship is registered under Sri Lanka that but the Merchant Shipping Act. Say we employ say Indian person individual. Even for Sri Lanka tax, he shall be considered as resident individual for Sri Lanka. Right? Clear? So that is individual. So this thing it says is the 69 1B in the individuals resident. Okay, this says so for a 12 months period we have considered 12 months period, not the year of assessment. How it says is present in Sri Lanka during the year. And that person stored within a period amounting aggregate to 103 days or more any 12 month period that commences so end during the year. So as per the tax laws, during the year means year of assessment. Year of assessment. Year means year of assessment. Right? So it says so during the year that 12 month period could be commenced or end. Right? Now our year of assessment is starting from 1st April 2024 ending with 31st March 2025. That's the year of assessment. Year of assessment definition is this 12 month period commencing from 1st April for 1 year of assessment ending with 31st March of the next year, subsequent year. right? 12-month period, right? So that period. So 12-month period commence or ending. Say assume this commence 12-month period commence from 1st May 2024. 12-month period commence. He came to Sri Lanka. Now 12-month period commence. From that day on, we have to count 12 months. That particular 12 months period, what is the number of days he physically present in Sri Lanka? If it is equal to 180 days or more, he shall be treated as resident individual for Sri Lanka tax for that particular period. That particular period means this period. So our year of assessment is ending for this period, starting from 1st April and ending 31st March. His 12-month period commencing from this day, and from that day we have considered 12-month period. For that particular period, he shall be considered a resident individual for Sri Lanka. Right? So that's what I say. Commence or end. This year of assessment it is commencing. Therefore, particularly this period start from 1st May. And our year of assessment is ending with this. For that particular year of assessment, this period he shall be treated as resident. This period he shall be treated as non-resident. And that's what is mentioned. He is present in Sri Lanka during the year, and that presence falls within a period amounting in aggregate of 183 days or more in any 12-month period that commences 12-month period that commences or ends in next year it is ending. So may out the padang ganne 1යි 4යි 25 ඉඳලා 21යි 3යි 26යි අපි හිතුවා එයා මෙතනදි ගියා කියලා. මේ පීරියඩ් එකට වෙනකන් එයා ප්‍රෙසිඩන්ට්. ඊට පස්සේ ආයෙ නම් බෙදෙනවා. Right? That's the meaning. So that's what. So 70 is very particularly mentioned. An individual who is resident in Sri Lanka only by reason of Arabic, this thing, shall be so resident for the start of 183-day period. Otherwise, a person who is resident in Sri Lanka during years shall be treated as a resident for the whole of the year. And only this particular reason it says, for that particular period he shall be treated as resident. For the whole year he shall be treated as. Somebody say reside in Sri Lanka, whole year of person shall be treated as resident. Say government employee, for the whole year of person he shall be considered as resident. Right? Only this purpose is say, for that particular period he shall be resident. That means for other period he shall be considered as non-resident. Right? So this thing what we discussed. So first June, here we question කියලා පටන් ගත්තේ 23 24ට. So මේ period එක resident වුණාම අන්න 24 25 පටන් ගන්නවා. එයා මෙතනදි ගියා. මේ period එක resident. ඊට පස්සේ ආයෙ ගන්න. Right? So in case of the company, so our important point, company, corporate taxation, right? Under that company. If that company incorporate or form under law of Sri Lanka, that company incorporate under law of Sri Lanka, it could be company act or any act. It shall be considered as resident company for Sri Lanka tax. It is its registered office. It is registered or principal office in Sri Lanka. Or at any time during the year, the management and control of the affairs of the company acts as in Sri Lanka. In such case, it shall be treated as resident company for Sri Lanka tax. So therefore, in other case, it shall be considered as non-resident company. Right? Non-resident company. If it is not incorporated on Sri Lanka law, it is non-resident company. If their registered office or principal office is not in Sri Lanka, they are non-resident company. Their management is outside Sri Lanka, yeah, it is non-resident company. Right? So So what are the things? What we can? So I mean, is there the difficulty of finding out whether that particular company is resident or non-resident? Then we have to check where the effective management is there. It says how to determine the effective management. Location of controlling shareholders. Where the controlling shareholders are. This is in case of the difficulty of determination of residential insurance company. It is not incorporated in Sri Lanka, not having registered office or principal office, but they are doing business. Sri Lanka. Whether it is resident or non-resident. If the controlling shareholders are in Sri Lanka, that means the shareholders are the owners of the company. Give some sort of hint. Where the directors are residing, where they are residing. And location of top level management decision taken. Where the management decision are taken. Registered public office or incorporation office. Where it is. Place of actual policy decision taken. That factors need to be considered. By considering that factor, we can sort out where the business is really happening, where the effective management is happening. In such case, we have considered if it is happening in Sri Lanka, yes, it is resident company for Sri Lanka tax. It could be incorporated outside Sri Lanka, registered office something here, but effective management is in Sri Lanka. So as per the law it says, you can determine it is resident company for Sri Lanka. That's reason is some companies it is very difficult to find out which country they have incorporated, which country they are resident shareholders, manager, or the management decision are senior manager decision are taken. Right. So it says actual management place. The control decision, strategic decision are there. Where that board is located, where that meetings are happening. Right, because in the board meeting that they are taking the decision. Right? Right. In case of partnership, if it is formed in Sri Lanka, any time during the management and control affairs of the partnership is exercised in Sri Lanka, here it is considered as resident partnership for Sri Lanka. If it is clearly mentioned, so it's formed in Sri Lanka, yeah, it is. Company also same. If it is incorporated under Sri Lanka, also, yeah. Right? So in case of trust, if it is established in Sri Lanka, that means trust deed is signed in Sri Lanka, it shall be treated as resident trust. For trustees are in Sri Lanka, at any time during the year, a trustee of the trust is resident in Sri Lanka. Trustees are resident. In case of the trust, there are two parties. Trustee beneficiary. Beneficiaries are a person who is entitled to the benefit from the trust. They are the person who is entitled to income, capital income. Trustees are the person who are managing the trust, administrating the trust. Right? If the trustees are in Sri Lanka, they are resident in Sri Lanka, then trust can be treated as resident trust for Sri Lanka. Right? So third one, at any time during the year, a person resident in Sri Lanka, trustees of Sri Lanka, beneficiaries of Lanka, trustees of Lanka meeting. But a person resident in Sri Lanka directs or may direct senior managerial decision. Direct or may direct senior managerial decision of the trust. Whether the direction is made along or jointly with other person or directly or through one or more interposed entities. Lanka will make it. Person who is resident in Sri Lanka. Take the senior manager decision. He is taking the senior manager decision. Trustee go ahead, Trustees club country. And the person who is in Sri Lanka, direct the trust, take the senior manager decision. Alone, so interposed entity, directly or indirectly, with through another entity. still the trust can be treated as resident trust for Sri Lanka tax. Right? Right. What is source in Sri Lanka? How we are determining whether there is a source in Sri Lanka? That income is generated from Sri Lanka. Section 72 and section 73 say what is source in Sri Lanka? Right? So under section 72 says realization or disposal of domestic assets and liability. In such case, treated as there is a source in Sri Lanka. Domestic asset means assets in Sri Lanka. If somebody is selling assets in Sri Lanka, it is treated as there is a source in Sri Lanka. Right? So in case of the resident individual or resident person, it is not a material. Right? Where is the source arise? Anyway, he is liable person. In case of the non-resident person, if the asset is Sri Lanka domestic asset, and if it is disposed or realized, then it shall be treated as a source in Sri Lanka to non-resident person. Right? Just like this. And there is a building, land, building, same, owned by another person. He is not coming to Sri Lanka, but he has purchased the apartment in Sri Lanka. He is not coming to Sri Lanka. Now he is a non-resident person. He owns assets in Sri Lanka. He owns domestic assets in Sri Lanka. If we dispose that thing, it shall be determined as a source in Sri Lanka. The income generated from source in Sri Lanka. Right? So that's section 32. So other type of payment that has a source in Sri Lanka, it says what type of thing? Other type of payment, it says under section 73, it says this is definitely considered as a source in Sri Lanka. That's a comprehensive list. Right? It says 731A says employment. That context is said if that employment is exercised in Sri Lanka. Employment is exercised in Sri Lanka. It shall be considered as a source in Sri Lanka. Right? The non-resident individual who is exercised employment in Sri Lanka. It says to the extent derived in respect of employment exercised in Sri Lanka, regardless of where they are paid. Payment point is not important. Whether they are paid or not in Sri Lanka, but if they are exercising their employment in Sri Lanka, it shall be declared there is a source in Sri Lanka. Right? So payment is with respect to employment. So in case of the government, if paid by or on behalf of government Sri Lanka, regardless of where they exercise that employment. If the payment is made by Sri Lanka government, it shall be considered as a source in Sri Lanka. The employment is wherever they exercise. Not a matter. But first case is there, other than Sri Lanka government payment. If employment is exercised in Sri Lanka, it shall be treated as there is a source in Sri Lanka. Right? So they are say employed in Sri Lanka. After the company in Lanka, they are setting their employee. Now employees are in Sri Lanka, they are working for that particular company. So employment is exercised in Sri Lanka. They may pay outside Sri Lanka. With respect to the payment point, it shall be derived as a source in Sri Lanka. Non-resident person having a source in Sri Lanka, then they are chargeable for Sri Lanka tax. Right? In case of the government, if the government is making the payment on behalf of Sri Lanka government, payment is made, it shall be treated as there is a source in Sri Lanka. Right? So to the extent derived from a company resident and conducting the business in Sri Lanka. Say in case of the company resident in Sri Lanka and that company is conducting business in Sri Lanka, they are making the payment. it shall be declared as a source in Sri Lanka. Right? But there are some income that is exempt, even employment income. The income of an individual entitled to privilege to the extent provided by the diplomatic immunities law. In that case, that employment income is exempt. Right? So diplomatic person, just like say, you know that high commissioners, they are exercising employment in Sri Lanka. They are paid, say, foreign high commissioners, consul officers, they are in Sri Lanka. Right? The British high commissioner, the British people are in Sri Lanka, they employed in Sri Lanka. Now exercise in Sri Lanka. As per the Sri Lanka law, they should have a source in Sri Lanka. But under this law, it is exempt. But they are exempt from Sri Lanka tax. Likewise, so that exemptions are available for other employees also. So, United Nations, Asian Development Bank, official, that type of person, they are exempt. Right? So, in case of the dividend, if the dividend paid by a resident company, dividend is paid by a resident company. Right? Company resident in Sri Lanka. This is resident company. If the company pays dividend, it shall be derived as a source in Sri Lanka. Right? So income generated from source in Sri Lanka. Resident company Sri Lanka, company profits from that they are declaring dividend to shareholders. They are not in Sri Lanka, non-resident, but it shall be derived as a source in Sri Lanka. Interest charges, annuities, royalties, technical service fee. Right? Or similar payment paid by a resident person, except where it is an expense of a business carried on through a permanent establishment outside Sri Lanka. As per this law, it says payment. What type of payment? It says interest, charges, annuities, royalties, technical fees, or similar payment. The payment is made by a resident person. Payment is made by a resident person. Resident person can pay Lanka. It shall be considered as there is a source in Sri Lanka. But this part is not considered as a source in Sri Lanka. Resident person make that payment. Right? First thing is says, if the resident person makes that payment, it shall be considered as a source in Sri Lanka. Resident person make that payment. What is interest, charges, annuities, royalties, technical service fees, or similar payments. Payment pay Lanka resident, it shall be considered as there is a source in Sri Lanka. Pay whatever payment. Right? Just like any service fee, it shall be considered as a source in Sri Lanka. But says, having said that, except where it is an expense of a business carried through a permanent establishment outside Sri Lanka. Sri Lanka resident person make the payment. He is making the payment. But that is an expenditure of a permanent establishment, permanent business location outside Sri Lanka. Right? They are expenditure. Expenditure is to this particular permanent establishment. It is outside Sri Lanka. Right? On behalf of that permanent establishment, he is just making payment. It's a payment arrangement. That's the meaning. The thing says, Lanka resident, if a person is resident in Sri Lanka, he make that payment, he shall be considered as a source in Sri Lanka. But if that payment is an expense of a business carried out by any person, that business is outside Sri Lanka, establishment, permanent establishment is outside Sri Lanka, he shall not be considered as a source in Sri Lanka. Right? So, next one. Interest charges and royalty technical service fees. So, similar payment paid by a resident person. except whether it is an expense of a business carried on through a permanent establishment Sri Lanka, outside Sri Lanka. That is what this diagram shows. So resident person make the payment to non-resident person, but it is the expense of a permanent establishment outside Sri Lanka. It shall not be considered as there is a source in Sri Lanka. Right. So other part. Interest charges and interest provided technical fees or similar payment paid by a non-resident person as an expense of a business carried on through a permanent establishment in Sri Lanka. Person who make a payment, right? A non-resident person, he has a permanent establishment in Sri Lanka. Non-resident person make that payment as a expenditure of permanent establishment in Sri Lanka. He shall be considered as a source in Sri Lanka. Right? It is also treated as source in Sri Lanka. Non-resident person, business carried through a permanent establishment in Sri Lanka to another person outside Sri Lanka. It shall be considered as a source in Sri Lanka. Right? Interest charges and royal technical service fee or similar payment paid by government of Sri Lanka, including such payment made by an institution on behalf of the government of Sri Lanka. If the payment is made by government of Sri Lanka or on behalf of Sri Lanka government, it shall be considered as a source in Sri Lanka. So winning from lottery, betting or gambling. If the winning from lottery, betting or gambling, game of chance is held in Sri Lanka. Game of chance is held in Sri Lanka. So I explained that, and the same thing we have discussed on the investment income also. The non-resident person who tender ticket from National Development Lottery Board, NL, right? Ganapulani interest through they can reserve ticket, they tender ticket. But the game of chance held in Sri Lanka, therefore it shall be treated as there is a source in Sri Lanka. Source in Sri Lanka, right? Game of chance is happening in Sri Lanka. Example, say I could say foreigner come to Sri Lanka, they are going to the casino club. They want a prize. Right? That's a Marina casino club area, casino dinu. But game of chance happen in Sri Lanka. Therefore, it shall be considered as a source in Sri Lanka to that particular non-resident. Right? Right. So natural resource payment made in respect of the or calculated by referring to the natural resource taken from land to sea situated in Sri Lanka. Any payment which is connected to the natural resource. The land from the land, natural resource means taken from land or sea of Sri Lanka. So that shall be considered as a source in Sri Lanka. Right? Rent paid for the use of, right to use or forbearance for using an asset situated in Sri Lanka. The asset situated in Sri Lanka, on behalf of that particular asset, rent is paid, it shall be considered as a source in Sri Lanka. So same thing, say foreigner can buy an asset in Sri Lanka, it can be rented out to another person in Sri Lanka. That person is making the rent payment. It shall be considered as a source in Sri Lanka. Right to use asset is in Sri Lanka. Premium general insurance. To any proceed from general insurance paid by a person in respect of the insurance of any risk in Sri Lanka, insurance risk in Sri Lanka, if you are making any premium, it shall be considered as a source in Sri Lanka. That is applicable only for insurance. So payment received by a person conduct relevant transportation business. Transportation business means so say carriage of passengers to embark or cargo, mail or other movable tangible assets that are embarked in Sri Lanka other than as a result of transshipment. So transshipment එකක් කියන්නේ ලංකාවට goods ගෙනල්ලා හරි ලංකාවෙන් goods අරගෙන යනවා නම් හරි treated as what is there is a source in Sri Lanka. The shipping line companies එකක් කියනවා ලංකාවේ company යන්න වෙන්න පුළුවන්. right? Foreign ship එක ලංකාවට එනවා. So ලංකාවෙන් goods ගන්නවා ලංකාවට goods දානවා. It shall be treated as they are getting any income. It shall be treated as a source in Sri Lanka. මේ company ලංකාවේ පිට incorporate කරනකොට right? ඒක ලංකාවේ incorporate කරලා දෙනවා ලංකාවේ resident company එකක්. So that is applicable to non-resident. But transshipment මේ නාමයෙන් ඇවිල්ලා තව නාමයකට පටවනවා. It is not utilized as a source in Sri Lanka. Transshipment එක apply. Rental of container. Containers ඔක්කොම ඒවා තියෙන foreign non-resident company you can see. Containers. So and relevant equipment which are supplement to incidental carriage reported above. Relevant transport means business of land, CEO, air transport, operator or charter carrying passengers, transport or other movable as tangible assets. Transmission manager. If somebody is doing transmission messages to Sri Lanka, the equipment is established in Sri Lanka. Right? Non-resident person who is having operator in Sri Lanka, so it shall be considered as a source in Sri Lanka. That message is Lanka, message origin place again not import. Where that operator is, if it is in Sri Lanka, it shall be considered as a source in Sri Lanka. So it says if the place of management in Sri Lanka, any type of payment, it shall be considered as a source in Sri Lanka. And the payer the government Sri Lanka expenses with the place of excise. Any other services? If the service fee payment, not mentioned above, any other payment, but if the payment is made from Sri Lanka, it shall be considered as a source in Sri Lanka. In case of government, so we are not bothering about where the place of excise is important. Life insurance. In case of life insurance or retirement, termination and pension payment, not falling within employment income, if paid by a resident person other than as the expenditure of a business carried on by the resident person through a permanent establishment outside Sri Lanka, paid by a non-resident person as the expenditure of the business carried on or non-resident person through a Sri Lankan permanent establishment, or paid by on behalf of government of Sri Lanka, it shall be considered as a source in Sri Lanka. Very similar to the service fee payment. Gift and other expenditure payment to the extent received in respect of business or investment conducted with domestic assets. Right? The foreigner come to Sri Lanka, he deposits money in the bank account. He won a prize, gift, right? Gift received. So it's conducted as a business or investment conducted with domestic assets. It shall be given as a source in Sri Lanka. Right. So assets includes the tangible or intangible assets, currency, goodwill, know-how, property, right to income or future income or benefit that lasts longer than 12 months period and as a part of an asset shall be considered as asset. But if domestic asset means an asset owned by a resident person other than foreign land or building or an asset held by a foreign permanent establishment of the person or held by a Sri Lanka permanent establishment. An interest in a land or building situated in Sri Lanka and shares in a resident company. The membership interest in body is more than 50% of value of this. The interest is derived directly or indirectly to one or more interposed bodies for land or building in Sri Lanka. It shall be considered as a domestic asset. Right? So application of withholding tax and fine withholding tax. So these type of expenditure. So that now we know what is source in Sri Lanka. So if that's source in Sri Lanka, if that person is making that payment, it is subject to withholding tax. Right? So you can understand that payment made to a non-resident person that are subject to withholding tax other than payment derived through a Sri Lanka permanent establishment. So if the non-resident person getting that type of payment, so what we discussed previously, service related payment. So it is subject to withholding tax, and if it is not to a permanent establishment. That means foreign person doesn't have a permanent establishment in Sri Lanka. It shall be subject to withholding tax. It is final withholding. And you know that what is final withholding. Once the payer deduct tax, non-resident person doesn't have any more tax liability in Sri Lanka. Right? So tax rate is 14%. Dividend is 15%. Right? Other than that, it is 14% or transportation business, there is another rate. But other than those things, generally that is 14%. Say either rent, interest or whatever that is subject to tax. This one tax at 14%. If it is liable for Sri Lanka, as for the Sri Lanka law, it is not liable. Not to worry. Because the thing is whether there is a source in Sri Lanka. Yeah. Whether that is liable for Sri Lanka tax or not, that is as per the domestic law. The domestic law says that is exempt, that exemption is available on unresident taxation. Right? Otherwise, it is subject to tax, that is subject to withholding tax. It is called final withholding payment. Right? If they don't have a fixed business location in Sri Lanka, just like this, the person make a service to Sri Lanka. Say company, ABC Limited. They obtain a service from another person outside Sri Lanka, non-resident person. They are making payment. So when the payment is required to deduct WST, say whatever rate. Once they deduct, that is final withholding. But second scenario is there. He has a permanent establishment. Right? So payment made to non-resident person that are subject to withholding tax. Other than payment derived to a permanent establishment. Yeah, may business location and thing. Resident person getting payment take करना. एक आध withholding tax है liable ना, but it is not final withholding. Right? It is not final withholding. What a final withholding. Right? Clear? So payment made to non-resident. So it is other than payment direct to Sri Lanka permanent establishment. They have a permanent establishment. Sri Lanka permanent establishment. They have a fixed business location in Sri Lanka. In such case, it is not treated as final withholding. So in other case, it is treated as final withholding. Make final withholding when I say, make final withholding make a advance tax subject to withholding, but they can get tax rate. Otherwise, you remember final withholding or tax rate under back. Pay, done and dusted, finish. No more pay. Right? You remember dividend income subject to 15% tax, that is final. It is not subject to further tax. Right? Then may I make a final withholding on may I create a conversion. Lanka business when I'm considering tax run. Tax run tax. That's why it's called, it's not a final. If they have a business, the location in Sri Lanka, fixed business location we call. So that location shall be considered separately as a separate person, and we need to work out profit or the income of that particular person, and we need to tax them. And if there is payment and on that WH is deducted, that can be deducted as tax rate. That's why it's called, it is not a final withholding. Right, we'll stop.